Hi everyone, welcome to today's video. So on today's video, I'm going to speak about 3 deeply discounted great stocks. These 3 stocks I feel might go 2x in the next 3 to 5 years. So this is a long-term purchase for me. That's point 1. Number 2, this is not an investment advice. Because I'm making this video today, please don't sell your house tomorrow and invest all your money in these type of stocks. Number 3, these are good companies, sensible companies. These have worked really well in the past and they are available at a good price right now. And I will show you the ins and out, and I will also help you understand why the stock price has fallen for these 3 good companies. So with these disclaimers out of the way, let us start discussing the stocks. Number 1 stock that I'm purchasing right now is called as CAMS, C-A-M-S. So first and foremost, let me help you understand the overall nuances of the company very quickly. One is that it is a zero debt company. Number 2, it is a monopoly company. Almost 70% of the back-end mutual fund management is done by CAMS. So they have 70% market share, which is huge. It's a monopoly. People say that this is a tech company. No, it is not a tech company. It is a company whose performance is in turn contingent upon mutual fund industry. What do I mean by that? So let me just help you quickly break this point apart, because this is a very important point about CAMS. There is a concept called as underlying asset. For example, there are a bunch of stocks. For example, Oil India Limited, ONGC, their prices goes up because the oil prices go up. So the underlying asset there becomes oil. Similarly, there are companies in the crypto space. For example, Coinbase is a classic company that if the crypto market is generally doing well, then something like Coinbase will also do really well. So these are companies that are significantly dependent on these underlying assets. CAMS, in my opinion, is not a tech company at all. People say that it's a fintech. Yes, technically it's a fintech, but there is nothing revolutionary in terms of the tech that CAMS has generated. All it has been able to do is that it has been able to form a lot of banking partnerships, get mutual fund business from them, and right now it's a monopoly. Now the switching cost for these mutual fund agencies to go away from CAMS is very high, and that gives the moat of the business to something like CAMS. And therefore it has 70% market share right now. Now let me very quickly take you through the financials of the company and let me help you understand and curate the viewpoint whether it's a good company or not. So sales have been going up. Generally speaking, there is nothing fundamentally off with sales. That's number 1. Net profits again have been going up. No problem there. And look at the profit margins. This is the super attractive piece of this entire puzzle, that because of very high profit margins for CAMS, it becomes like a very attractive business. And that's one of the reasons why, if you take a look at the shareholding pattern of CAMS, you will see a lot of FIIs, DIIs investment in this company. So FIIs currently in the recent quarter have increased their shareholding in the company, and DIIs has cut down the holding a little bit. But overall, the FII, DII combined, the shareholding has gone up. Why? Because FIIs, DIIs love to invest in these high OPM type of businesses. OPM means not the narcos opium, but the operating profit margin. So I hope this point is clear. Then you will say that, Akshat, you know what? You are giving all this gyan, but then can you explain why the CAMS stock price fell? If it's such a great company, why is it that some of the DIIs sold their holdings, this, that? Okay, so let us have a very quick discussion there also. Now, there are 3 specific reasons why the CAM price has taken a hit. And when I say hit, it means really bad hit. So let me first and foremost show you the fall in the stock price. So if you take it from the top, right, from the top to now, there has been a 40% correction on this stock. So if you just generally look at these type of companies, 40% correction, my God, something bad would have happened. So 2-3 points there. We need to understand it, that whether this is a valid fall or is there more at play. So I will share my perspective. Of course, everyone's perspective can be different on this, but this is my honest analysis. And there are 3 reasons why I feel that CAMS stock is falling. Now, the first reason why CAMS has fallen is the yield and the general interest rate environment in the macroeconomy has been very volatile, so to say. Now, this impacts debt-based mutual funds. And as a result, because a lot of companies like HDFC, AMC, Nippon Asset Management, bunch of different companies, they have a lot of stake in these debt-based mutual funds. So the AUM, asset under management, for a debt-based mutual fund has gone down quite a lot, right? So what does this mean in easy to understand language? So let us run a parallel example. So for example, let's pick banking sector, right? Now in banking sector, what happens is that if HDFC Bank, you're going and depositing money, and if the bank gets a lot of money, it is collecting all that money, it can use that money to pass it off as loans, and then it will make more returns or profits from the fodder that you have given them. That fodder is the money that you're providing them, right? So that is how the banking sector operates. So the fodder is what? The fodder is the cash that you are giving the bank or the deposits that you are giving to your bank. That is the quintessential thing. Similarly, in the mutual fund industry, AUM is the fodder. That this is the amount of money or the SIPs that people are doing in their funds. Now this AUM keeps going up and down. Sometimes all the fodder that the mutual fund managers have collected, it can go down because of the changing interest rate environment. Now the video will become super complicated, so I'm not delving deeper into it. But to cut the long story short, because of the yield changes, the fodder, that is the AUM for mutual funds, have shrunk, and as a result, it has impacted CAMS business also. The worrying part is that at least in the mid-term to short term, this thing is not going to improve. So this is the weakness or the con part of CAMS, that for a substantial period of time, unless this interest rate environment stabilizes, this AUM is going to stay low from the debt mutual fund side. This is the first key reason. The second key reason is that the competition, at least in the short term in the mutual fund industry, has become brutal. Even the top players in the AMC or mutual fund industry, for example, HDFC, AMC, they have also lost a little bit of business. A lot of competition is rising. But the viewpoint that I keep on stating is that big players, like for example, Navi, it's entering the mutual fund industry. For example, Mr. Nitin Kamath from Zerodha is entering the mutual fund industry. Why is that? Because the mutual fund industry is a supremely profitable industry. Yes, there is short-term pain in it. But if you take a 2 to 5 year timeline, and if you believe in the story that CAMS business is not going away, yes, instead of having 70% monopoly, it will come down to 40% or 50%. It's fine. It's not end of the world. So from that particular perspective, because of the slight spike in the competition, as of now, the mutual fund industry is shrinking. That underlying asset is shrinking. Therefore, the CAMS prices are also going down. The third point is that Wahlberg Pincus has cut down its stake. So now what is Wahlberg Pincus? So Wahlberg Pincus is a private equity fund. It invested in CAMS. It made a lot of money in the short term. They made its investment in 2017 and they have cut down their stake recently. Have they cut down all their stake? The answer is no. They have only sold 25% of their stake, which indirectly means they have still invested 75% of their stake in this company and they still feel that the company might grow. And as I showed you earlier, that if you check the investment holding by FIIs, DIIs, there is nothing wrong with the company per se. So these are the reasons why I feel that CAMS has fallen, and I'm aggregating it now. How much stocks have I aggregated so far? So let's assume that if I had to put, let's say 10 lakh rupees in this stock, I have already put 4.5 lakhs or 45% of my total investment target in this company as of now. If it falls further, I will invest even more. And that is a right way of buying a stock like CAM, not because there is something off with the company, but because right now the investment environment is just slightly negative. Now, before I move on to the second stock, here is an important snippet for you. Please zoom in and read. This shows the historic performance of the mutual fund industry and the rate at which it has grown. So AUM of Indian mutual fund industry as of January 31, 2022 stood at 38 lakh crore. Now that is not impressive. What is impressive is, and in the last 5 years, this is after market correction and severe volatility now, the mutual fund industry has 2x in the last 5 years, which is again a decent growth rate for an industry. So overall industry viewpoint is still very much intact. It is still very much bullish. But yes, short-term volatility will be there. So therefore take position slowly. Let's move on to second stock, which is the second stock that I'm going to speak about. It is Amritanjan. I am very bullish on this stock. I have always been bullish on Amritanjan. What are some of the reasons why? So let me show you two things. One, let me show you historic results. And number two, let me show you latest results of Amritanjan. And then we will talk a little bit more. So if you take a look at the sales have been constantly on the rise. There has been no decline in sales. Number two, there has been no major decline in profit per se year on year. Nothing wrong there. What about operating profit margin? Operating profit margin is roughly 14-15%. That's the average 15% OPM on which it is operating. For an FMCG type of a company, this OPM is pretty good. It shows that the company has pricing power. It's a small cap. That means that the growth prospects are great because something like Amritanjan has a very high likelihood to go to 5x. Compared to something like HUL, because HUL size is so big that going to 5x at HUL size is very, very difficult compared to Amritanjan. And because it's a zero debt company, it means it can fend off the turmoil that is happening in the market right now. So with that said, let us look at the recent results of Amritanjan. So this is the quarter ending 31st December 2021. And if you take a look at from a quarter to quarter basis, the revenues have stayed roughly the same. There is no problem there. Profits have gone up. If you take a look at from an yearly basis, for example, if you compare 31st December 2021 results, there has been an improvement in profits also. There has been an improvement in revenues also. In fact, revenues have gone up much faster compared to profit, which shows that the OPM has been shrinking. Now, why has the OPM shrunk? The reason is fairly easy. We have spoken about it multiple times on this channel that because of the high inflationary environment, the price increases are happening on the supply chain side, because of which the input prices have increased, which is cutting down the margins of the companies. As and when the price inflation pressure goes away, these companies are going to skyrocket in terms of its profitability, and that will give a boost to its stock price. Now, can I prove that to you? The answer is yes, I can prove that to you. And here is a conference call record of Pidilite Industries, which can act as a good proxy. And this is one of their snippets. So what they have said is that there has been persistent steep inflation in input cost, partially mitigated by price actions. So Pidilite was able to increase its price. Same HUL, Nestle. Amritanjan might not have increased its prices by that much. It's a small cap company. The brand value is not that strong compared to HUL and other products. So it might not have been able to do it as of now, but it's a zero debt company. So it will survive. Don't worry about that. Then going forward, we expect near-term demand conditions to be a little bit more challenging. Now, let us very briefly touch upon as to why the stock price has fallen. So let me first and foremost show you by how much has the stock price actually fallen. So it has fallen by roughly 25% from its top. This is a big fall for a company like Amritanjan. Please remember that this is a small cap company. Of course, the volatility will be much higher. Now, if you compare this stock price fall to even the giants of FMCG, it's not as if that this is a very worrying fall. So what are the reasons for the fall? So number one, there has been a lot of input price pressure on FMCG companies. Even giants have fallen. For example, if you check the graph for HUL, it has fallen from its top. And if you check the bottom, it fell by roughly 20%. Amritanjan fell by 25, HUL fell by 20, it's not end of the world. So that's point one. Now, why has it fallen and will it continue to persist? Now, can we build upon this theory and try to predict now till what point this price pressure is going to be there? So I will take you back to that Pidilite con call, and this is what was said. That going forward, we expect near-term demand conditions to be a little bit more challenged given the disruptions as a result of the pandemic, as well as input inflation to continue. So this problem is not going away, at least for the short term. And this year, it looks like that these companies are going to face challenge. But should you just stay away from these stocks? My answer is no. I'm continuing to aggregate these stocks because we don't know when these pressures are taken off. If there is even a whiff of recovery, these stocks in a day will go up by 5-10% easily. So I'm a net buyer in Amritanjan. I'm not selling it off, but you should at least have a 2 to 3 year viewpoint because you don't know at what point this stock will start giving run up. But will it give run up? No one can predict, but my bet would be a yes. It is likely to give a run up whenever the market recovery starts happening. Now comes my third and final pick, which is Deepak Nitrite. Now this is one of the most talked about stocks from the last year. So let me first and foremost show you something very interesting on the price chart of Deepak Nitrite. So if you take a look at right now, it is trading at 2,000 rupees. At its peak, it was trading at roughly 3,000 rupees. So there has been a significant fall. That's A. The stock is available right now at its year-old prices. Is there something fundamentally off with the financials of the company? So let us very quickly take a look. So if you check, sales have been consistently increasing at a very brisk pace. Net profits have been increasing at a massive pace. Probably the company might have had a couple of anomaly years where the demand was surging like anything. Now people are putting brakes on Deepak Nitrite's growth because they are saying that, you know what, this company has grown so much in such a short duration of time, it probably will not grow. Is this understanding correct? Because this is the core of the issue if you believe in Deepak Nitrite's story. So let me discuss this issue in a bulleted format. So number one, take a look at the recent results. So here are the recent results for you. So if you check, net sales turnover has grown from the last quarter also. And if you check from December to December, last December 20, it was 487 crores. And this December, the sales turnover has been roughly 690 crores. So decent growth. What about total income? Has it grown? Yes, it has grown. What about PAT? Has it grown? Profit after tax? Yes, the company is still profitable and even the profits are growing. So this company is not slowing down. Then why is it that the company's stock price has fallen a lot? By how much has it fallen by from its top? If you check, this is roughly 35% fall. So a huge fall in Deepak Nitrite, no doubt about that. But interesting thing is this, the results have generally grown. The current results are also fine. There is nothing off, but the stock price has fallen by 35%. How can you make sense of this? So let me help you make sense of this. So this is a snippet from Motilal Oswal's commentary about the stock. So they have said that we are downgrading the stock to neutral. The stock trades at 31 multiple. owing to the limited earnings growth opportunity till the time its greenfield expansion gets commissioned. We downgraded the stock to neutral, valuing the stock at 28 multiple. We arrive at a price of 2300. So A, they have given a target of 2300 rupees. This snippet is roughly 4 months old, so their perspective might have changed now. I don't know. Second and more important point is what they are saying in very easy to understand language is this. They are simply saying that, hey, Deepak Nitrite is a very small company, right? It is trying to expand its capacity, and for this, they have put in a lot of money and they are commissioning certain projects. So essentially, they are expanding capacity. They have already declared their growth plans. They are putting money into new factories, new processes, new systems, etc. And whenever these things get commissioned, whenever the capacity expansion takes place, these companies might be able to generate a lot more profit. That is the simple argument here. So let us try to understand this point by looking at some data. So if you check the expansion plans of Deepak Nitrite, what it is trying to do, the company is nearing the completion of its brownfield expansion. 60,000 metric ton per annum capacity. It acquired land and bunch of other different things. Company will be investing 300 crores into new products. Deepak Nitrite has planned a capex, capital expenditure of 1,000 crore to be incurred in 22-23. This is both good news and bad news. Good news because the company has very clear expansion plans. They have the money to do it. They are profitable, and this is reflected in their cash flow statement also. For example, if you check this tab, fixed asset purchased, you will see that the company has been on a constant spree to invest more in terms of expanding their capacity. This is precisely what they plan on keep on doing. Now, the bad news is that given all these massive expansion plans, and we don't know till what point this will get completed, especially given the downturns in the market. So very, very important, please do not get scared. So therefore, I said that if you do not have a 2 to 3 year horizon on these companies, please do not buy these companies. These are not trading companies anymore. You have to invest, let the capacity grow, let it reflect in the market, and once it starts making money, then a new P multiple might be assigned to them. And that is when you as a shareholder might make money. So this is where I will summarize the video. So 3 specific stocks we spoke about. Number 1, we spoke about CAMS. It will recover when mutual fund industry recovers. No problem with the results. Number 2, we looked at Amritanjan. FMCG is generally beaten down. Amritanjan has unfortunately become a casualty of the war that has been going on due to price increases, but it's a great company. There is nothing off with the company per se. Third and finally, Deepak Nitrite. It has been one of the foremost growth stories in the stock market in the last 2 to 3 years. Stock has corrected a lot. So therefore, it makes a little bit of sense to take some positions in it. That is what I am doing. But the horizon here is very important because these are not tech companies or story companies. These are cash flow driven companies which has some very concrete underlying asset. So the stock price is not going to skyrocket in a very short span of time. It will take a little bit of time, but whenever the run up happens and whenever the environment becomes positive, you might have a very hard time catching these stocks. So my approach would be an SIP type of an investment. I will be roughly 30 to 40% invested right now. Then I will reassess the situation and keep doing SIPs in it. Thank you so much for watching the video. Please give it a thumbs up. That helps a lot in terms of growing the channel, and I will see you tomorrow.